Hey guys, what's up? Today is a video, I think, mostly because I'm sick of explaining it to my friends. So now I can just make a video and I can just send them the link every time they want to have a stupid argument with me. And it's incredible how they sound like I used to sound. And I consider myself such a smart person. And until I did the math on some of these issues and some of these myths and debates, I used to believe lies. So this one's going to be about the mortgage interest and why you should keep that for the tax write-off. And as I've been telling people about this journey and how I want to attack debt and how I'm putting extra money on this, that, and the other thing, I keep hearing it over and over again. You got to keep your mortgage around so you get that tax write-off. So it was very simple. I put it down on paper, and it is ridiculous how I used to think that I needed to have a tax, or how I needed to have a mortgage to have interest to write it off, and how much I had to pay into that interest to get a small return on my money. So I put it down on paper. Here it is on paper. Take a look. All right, so here it is on paper. And please, by all means, if I'm wrong, please tell me I am wrong. But have some math or something to back it up. Don't just tell me I'm wrong because you want to disagree with me because you were doing something stupid. But so here's the myth right here. Should we keep our mortgage because of tax write-off? Great. So you have two choices that I now know of. You can listen to broke people, because a wealthy person has never, ever, ever told me to keep my mortgage. Ever. And if you want to know why wealthy people don't do that, do some simple math and decide on your own. So let's consider a couple of things. When filing your taxes, you have two options. You could take the standard deduction, which depends on if you're single, if you're the head of household, if you're married, etc. The biggest one is if you're married, which I think right now is $12,600 a year. You can take that standard deduction, or you can itemize your deductions and take more than that standard deduction. So you can do one or the other. You can't take both. So taking this interest payment and writing it off would be a part of this itemized deductions. But in the United States, roughly 2/3 of people take the standard deduction. So 2/3 of us are not doing what this myth tells us we need to do, okay? So if you were one of those 2/3, your interest would not matter. You'd be taking the standard deduction, so it wouldn't matter what your mortgage is. But now let's say you do. I live in New York State. Just my property tax alone get me up over that. So using round numbers, let's say I have a mortgage at 5% APR for the year. All right, nice round numbers, keep things simple. At the end of year one, I paid $10,000 in interest that I can now deduct from my income. Great, we love deductions. Let's say I made an income of $60,000. If I had no mortgage, none, and I was in, say, a 25% tax bracket, I would owe $15,000 on that 60. All right, that's how much I would have to pay in taxes. $15,000 on that. That's no other taxes, nothing. This is just strictly the mortgage. But now if I didn't have a mortgage, if I did have that mortgage deduct, now instead of this $60,000, my income could become $50,000. At the same tax bracket, I would now own $1,250. All right? And that would be a savings and a tax return of $2,500 a month. Whoopee. There's so many times we get our tax returns back and we're so just excited to get money back at the end of the year that we don't realize where that tax return came from. Well, essentially, it cost me $10,000 in interest to the bank to get $2,500 back. That is a terrible, terrible return on investment. So keeping my mortgage to keep that interest and write off that taxes, that's bad advice. Think of it like this. If I told you, hey, first of the year, give me $10,000 in cash, and at the end of the year, I'll give you $2,500 back. Would you take that offer? Nobody would. Nobody would. Essentially, that's what we are doing. To get that tax write-off of $2,500 in a 25% tax bracket, you need to give the bank $10,000 first. That is ridiculous. And it doesn't matter what tax bracket you're in. I'm in a different tax bracket. Even if you're in the highest, what's the highest tax bracket? 36.9%. All right. So you're going to give the bank $10,000, and they're going to give you $3,600 back. Still, a terrible, terrible return. Get out of debt, pay your mortgage off and pay it off quick, because the myth that having this interest payment is saving you, it's just terrible, terrible advice, and it's what people that did not sit down and do the simple math do. You're smarter than that, right? Please, if I'm wrong, comment below. Tell me how I'm wrong, but have some numbers to back it up. Please, please, pretty please. Have a great day, guys, and I'll get you on the next video.